The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is the 2024 tax season, and we want to help you to make sure that you don't overpay. And, a slip-up could cost you thousands of dollars, and we're here to make sure that it doesn't cost you anything over than what they make you pay. I'm Esther Gulius, the Tax Lady, wishing you Happy New Year. We had a great year in 2024, and we're looking forward to 2025. And, of course, I have my buddies in studio with me, Tiffany Fabian. Hey, Tiff.
Hey, happy Saturday.
Happy Saturday to you, and Christopher Fabian.
Hello, Esther.
Hello, Christopher. Okay, so, it's tax season, right?
It
It is.
So all of our offices are going to open up mid-January. The IRS opens up the end of January. It's interesting how they've kind of been pushing that back. Isn't that interesting?
Every year for the last 4 years.
Okay, so
Further
you
and
wanted to
further.
talk about electronic filing statements because many people are getting their statements sent electronically. And if you don't download them and print them, hello?
Right. So if you signed up for paperless.
Or you might not even know that you signed up for paperless.
Yeah, that's true. You may not even know you signed up for paperless. So you got to check, if you know where you have your money and you made money, expect a 1099. And if you're not getting it, look online, call that place up and say, wait a minute, where is it? So,
Well, even if you don't know, you really have to be very careful about what goes into your inbox electronically, your electronic mail. We're all used to going to the mailbox and picking up our paper statements, but the same thing, the same weight and credibility is when they send it to you electronically. It has to be up to you to go and print those documents. If you don't have those documents, that means the tax return that you prepare, if you ignore it, will be wrong, and it will mess up it'll mess up your summer, fall, winter, and spring, right?
That's
Right.
right. Yep. It
So
sure
be
will.
very careful. So we wanted to talk about getting ready for tax season. By the way, we're really proud to announce that in Florida this year, in the Naples, Marco Island area, we're going to be on WGUF 98.9. So for those of you down in Florida who have tax questions, you can always get a hold of us as well at egtax.com because we certainly want to help you. But for everybody else, let's talk about BOI. BOI is still in effect, right?
it is. It's still there. That's the beneficial.
We had talked a couple of weeks ago that they were waiting because they had taken it to court and it was suspended, but it's now back in the law.
That's right. So get it done. You have to the 13th. Even if it goes to court again and they postpone it, just get it done. One less thing you have to worry about.
Yeah, the penalty is up to $10,000, $500 per day that you're in non-compliance. It doesn't take too many days to get up to $10,000. And so you don't want to be stuck with a bill from the Treasury Department. So it's a simple... You go to, it's beneficial ownership information, and it's for the Department of Treasury Crimes Division. That's because they want to make sure who it is that's getting this thing. And so you just fill out that information, and if you need help, EG Tax will help you.
That's right. We got Kim. We got Diego. We have a whole team in place ready to get them done for you.
Right. So it's just simply information. There's no cost to you to file that form, okay, with the federal government. But if you don't file it, there's up to a $10,000 fine, and we don't want that to happen.
No, it's just such a simple thing. So just do that so
Okay.
you don't have to deal
All right,
with that.
and so, getting ready for tax season, and I thought it would be informational for people to know things that they should look for. So obviously, your W-2s, which is a wage statement, right?
Yep.
A 1099s, that would be other forms of interest, dividends, maybe 1099 MISC, which means that you're performing a function and you might have to pay FIC on that. Stock transactions,
Yeah, your 1099B.
right? Social Security, that's an SSA form. Gambling winnings,
Yeah, and the thing with the gambling is you probably got those W-2Gs when you won.
Right.
So if you you won and you lost it, go to the casino and get that statement as long as you use that card, because if you don't report it, the government knows about it and you'll get a letter later on.
right? Self-employment. Now, not everybody that's self-employed is going to get a 1099 form. Many people that maybe you have a landscaping business or a snow removal business, and it's up to you to report voluntarily the income that you received for performing that service.
Right? Right?
And that's on a Schedule C. And so you're going to start off with all your income, reduce it by all your expenses. You then pay taxes in two forms on the bottom line. What are the two forms of taxes they pay?
Self-employment tax and income tax.
Right. So you're going to pay self-employment taxes, which is basically FICA and Medicare,
Correct.
right? And income tax
Yep.
on the net profit.
Yep.
If you lose money, what does that do to the rest of your return?
It gobbles up some of your income, so your adjusted gross income and your taxable income is less.
So it actually will save you money,
Correct.
right?
Yep.
All right. And then rental income that you receive, that's another thing you have to, and again, unless maybe you're a HUD owner and they're paying you from the federal government, they're not going to send you a statement, but it's up to you to report the income that you receive from rentals. Unemployment, that's a big thing, because that's another thing where the state of New York
Doesn't mail you a
doesn't
paper
necessarily send you it through the mail, right?
hardly ever unless you request it. It's a 1099G form, and you have to get it online through your portal through New York State. And sometimes it's troublesome for people to get this because they have several different logins and usernames and
people, and how many of my clients that I've done, and I'll sit there and I'll say, well, I'll get it for you, right?
Right.
What's your username and password? I don't know,
Yep.
right?
Yeah, how did you do
and
your
sometimes
unemployment?
it takes months to get it.
Yep.
And so you can't file your return. And so this is all about getting ready to file your return. So if you had New York State unemployment, you want to make sure that you go after that information so that you can file your return.
That's right. You need it. So,
Okay. How about retirement income?
1099R.
Right.
Whether it's retirement, IRA, 401k, all these, your Roths, even a distribution from a Roth that you took out before 59 and a half, you have to report on the tax return. It may not be taxable, but you're going to get a 1099 and you got to use that and do an 8606.
So before tax time, where you're actually going to sit down with your accountant, or if you're somebody that wants to do it yourself, God forbid, you want to make sure you have all your documents, because if you don't have all your documents, you're going to send in a bad return, which means it'll hold up everything.
Yeah. And sometimes you just want to wait. I was talking to one of my clients the other day, and they put money into their Roth, but their income is higher. And so usually I just tell people before they make their contributions, you have 3 months into the new year, so you might want to hold off on certain things,
Yeah, I mean, don't be so anxious to get the tax return in because you think you got this refund coming, to find out that they're not sending you your refund. Then they're sending you forms, and it's taking you to July to get your money. Make sure you have all the correct documentation in
Yep.
place.
Or a lot of times
Right.
you can get it started. Yep, that's right.
That's right. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we have some texts that came in, right?
Yeah, there's two from two different people. The first one says, Esther, what is a BOI? Please let us know. Thank you.
Okay, so that's beneficial. That means
Ownership.
basically, to put it into English, who is the person that owns the limited liability company or corporation or partnership, so that in the event that we need to go after you, we need to know who you are. Beneficial owner information.
Correct.
BOI.
Yep. And
And the thing is, they really want to know who you guys are. And the same thing, I mean, EG Tax is a subchapter S corporation, so we had to do ours.
That's right.
We sent in our
yeah,
BOI.
I think it's just a way of organizing things, because it was really hard for the government to figure out who was the owners of these. So it's one of those, people like to say Big Brother's watching, and
and Big Brother is watching.
Yeah.
So this is a part of Big Brother's game plan here.
Yeah.
So you want to make sure you get that done, and you go to FinCEN, Financial Crimes Information Network, and that's who you register with.
correct. Yeah. And then the other one says BOI. This is a different person. BOI reporting was put on hold again as of the end of the year, 12/28.
Well, I disagree with that, because I'm on their website right now and it has a countdown. The federal deadline for entities formed prior to 2024 is in 8 days.
Right. So
I know
mean,
there
it is
was
true,
talk.
It was suspended in December.
And then they took
Yeah.
it to court.
But then the court said, no, this is, and so, we don't have, you have to understand, we don't have a dog in the hunt, except to make sure that you don't get the penalty.
Right.
I mean, and the thing is, since it doesn't cost anything to do the form. You don't want the penalty. Anyway, I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a break. We'll be back on the other side. Hey, y'all, my brothers and sisters out there. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Text us 716-8030930. We have 32 offices opening mid-January. IRS is open for business towards the end of January 29th. We'll make sure that we get you all up and running, so that you're the first guys at the water cooler to make sure your refund is the first one's released, provided you have all the information, and that's the most important thing. Don't file your return without the right information. You're just shooting yourself in the foot.
That's right. That's right.
Okay, we got Joe. Hey, Joe, how are you, sir?
Oh, fine. Thank you, Esther. How are you?
I'm marvelous. What's new?
Well, I have a question. I have some rental property, and I'm looking to sell it. I don't know what the federal tax would be on that, if there is a federal capital gains tax applicable.
Okay, let me ask you a couple of questions. Can I, Joe?
Yes.
All right, when did you buy the rental property?
Oh, 1991 or 90.
Okay, so it's pretty much fully depreciated. You never lived there, right?
That's correct.
And in the last few years, have you put all kinds of money into it, or has it just kind of been what it was? You just
No, it was
did
a
repairs
complete
and things.
It was a complete rehab when I bought it. And since then, just upkeep.
Okay, so assuming that, and I'm making an assumption that most of your depreciation has been used up, what do you think that you're going to sell it for?
I've had a couple of agents in there. They think somewhere between 400 and 425.
Wow, good for you. Okay, so assuming that, and you're going to use a realtor to sell it, right?
Possibly.
Okay, so let's say your expensive sale is about 50,000, and you sell it for $500,000. That'd be about a $450,000 gain. The maximum you're going to pay taxes on that is 20%. So federal, and then the state of New York, you're going to pay at the New York rate because they don't give you any break on New York State. So I'm assuming that you're going to pay almost
28 to 30%.
Yeah, 30%. So if you're at 450,000 at 30%, you're going to pay about 135,000 in taxes. But you can do something called a tax-free exchange, and you can take that whole piece of property and exchange it into another piece of property, even one that you aren't managing. Like, for instance, to get into a limited liability partnership where you take that income and you give it to the partnership, and so they're going to give you a monthly income, but it won't be subject to taxes until you sell it. Are you there? Hello.
Yes.
Did I lose you?
No, he's-
Yes, you did. With the limited partner, that would be invested in another piece of
Right.
real
And
estate.
so, in other words, instead of paying $135,000 to get out of it, you can do a tax-free exchange. And Russ Gullo, who's a partner of ours, right? you
Yep.
guys?
Yep.
He is an exchanger in West Seneca, and that's all he does is take people's property that would be so subject to taxes, and he exchanges it into other property or into limited partnerships.
Okay, but I would have to reinvest the whole sales
Nope.
amount.
Yep.
Well,
yes,
whatever you. Go
sorry,
ahead, Chris.
whatever you keep, you would pay tax on. It's called a boot. So you would pay tax on
You
that.
get the boot. You get the boot.
The
Oh,
boot
yeah,
in the butt.
yeah.
But here's
Yes,
the thing:
I'm
you're not going to
feeling
make
that
a
right
decision. You're not going to make a decision off of a phone call, right? The important thing
That's
is that
correct.
this is something you're aware of, and I suggest you give us a call so we can work on it. for
Yeah,
you.
I got another idea, Joe, if you don't mind.
Okay.
Do you have any?
no, I
do you
don't.
have any children?
No.
Oh, okay.
That takes care of
Okay,
that
that
idea.
takes care of that idea. I
But
was-
to explain to him what would have happened.
Yeah,
had he
because
had
I was
children.
going to say, if you had somebody, maybe you have a nephew or somebody, you could have them manage the property. You could pay them to take care of it, and then when you pass away, they inherit the property, and then they get a stepped up basis
and not have to pay tax.
and not have to pay tax on that.
But again, if you have nobody that you'd want to leave the property to, and you're just looking to get rid of it and maybe go to Acapulco for a while, what you might want to do if you don't want to sell it, you might want to do the exchange. But again, if you sell it, figure out about 150,000.
Yeah, it's all those capital gain. It's all that depreciation that you
Right.
now have to pay capital gains on. I just had obviously one of my clients call the other day, and they're like, "Gulp! It's going to cost so much in taxes."
Right. So you need help, Joe? We're here.
All right, and can I just recap
Yeah. Recap is
briefly?
good. Yeah.
It would be 15% federal,
20%.
20%.
And the state
And
of New
the
York.
other 10
So it's
would be
almost
for the
it's
state?
almost 30% you're going to pay.
All right. I think the tax man, I don't want him digging into my pocket that deeply.
I know. So give us a call. We'll set you up with Russ Gullo if you want to learn about how to do an exchange.
Okay, thank you very much.
All
Esther
right.
and
Well, Happy
company.
New Year.
Thank you. Same to you and your
All right,
crew.
thanks for calling.
Thank
Joe.
you. Yeah, you know,
All right, now-
part of it, Esther, I know we're going to go to break soon, but you had the advantage when you have a rental of being able to take advantage of all those depreciation, and it was a tax savings for all those years. Now, if Joe was a higher income earner and he didn't get to take advantage of all those losses, they become suspended, and so you want to make sure that you resurrect those losses when you go to sell it. I just want to have everybody understand that if they didn't get to take advantage of all those.
Right. So in essence, what Tiffany's saying is if your income exceeded 150,000, then the losses from the rental property would be suspended and kind of piled up for the day of sale. But this not being Joe's situation, he would just have to pay the taxes.
Yeah.
The basis, which is something I wanted to talk about today, the basis when you sell something is so important, and you don't want to just gloss over that, because what Tiffany's saying is correct. The basis can be adjusted by many things: suspended losses, improvements, and things of that, inheritances. So that's really important.
Yes.
Okay, and then we have Sue. Hey, Sue, how can we help you?
Yes, hi, Esther. My husband received last year both New York State unemployment benefits and also Social Security benefits during the year. Unfortunately, he passed away on September 30th or September 29th. I have probably no way of getting into his computer. I have tried to be able to get into Social Security to see if I could find the 1099 online, and it's probably not going to happen. He was so sick during the year and in and out of hospitals and rehabs. He never had a chance to sign in with that login.gov when they changed, the access to Social Security for online stuff. And so I'm really at a loss here.
Did he get a paper statement last year for his Social Security?
He did, and I'm hoping they would give us one this year. But
yeah, then you will. You will get that again this year for that.
That would be wonderful. Okay.
But now, in the event that you don't,
yes,
call Social Security and tell them you're the widow, and they will ask you for proof of his death. And they're going and proof that you're the person supposed to inherit everything, and they'll send it to you.
Okay, that's good. In fact, I do now receive benefits on,
from him, right?
From him, right? So they actually know that he has passed.
Well, I'm just saying, in the event you don't get that statement by the end of January, you can call Social Security, or you can call us. We'll help you.
Yeah, if you have to, we could get tax transcripts for you.
Yeah, let's. I'm going to put you on hold, Susan. We'll get you after the news.
All right, we're going to take a short break. I'm Esther Golias, the tax lady. We'll talk to you on the other side. Hey, to us, you are family. I'm Esther Golias, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone, and it's tax season, brothers and sisters. So, we want to make sure you don't overpay your taxes. And so if you've got any questions, 8030930, 8030930, star 930 on a cell phone.
I know.
Text us at 716-8030930.
Yeah. I know the receptionist at the office lately had to put another person on the phones because we're making appointments, and
it's true. If you want to, if you have a
gear.
specific time you want to come in, you should call now. Even though you don't have your things, we'll get everything rolling, and if there's something that's missing, you can send it back to us later. But I'll tell you, the important part is to get your name in the hunt, so
Robin at the office is like a well-oiled machine. Oh, she's trying to she just got it just firing on all pistons. She's just amazing. So
okay, do we have another?
Well, we got
Susan.
Right? We got Susan still on hold. Hey, Susan, thank you for holding.
Sure.
So now, what else was the other income?
Okay, the other income was the New York State unemployment, and I'm thinking maybe I could walk into the New York State Labor Office here in Lockport and explain the situation to them, that I need, a statement of his unemployment benefits. That
again, you don't have access, right?
No, I don't.
Yeah.
Yeah, and I think even
I hate to say this. I think they're going to tell you, I'm sorry, we're the Department of Labor, not the Department of Unemployment.
Yeah.
Oh, well, maybe then I need to call New York State Unemployment and tell them, because they wouldn't
it's
even know.
It's very difficult. It's so difficult to get a hold of anybody anymore. That's like they don't want to talk to you.
When you call New York State Unemployment, there's it's all automated. There's an option Sue, for you to push for them to mail you a copy. So, but the only thing is, before you hit that, you're going to have to know his password or something.
And username and password.
Username and password on the phone system, and it's all automated. You're going to have to know his username and password. What I was saying before the break is, in about 3 months, the IRS is going to have all of the 2024 transcripts, and so we can fill out a 4506T form, or we could do it through the phone and get his transcripts sent to you.
Okay.
So that's an option, is we can get his transcripts sent to you.
And the other thing is, you have a representative that is in your neighborhood that you voted for. Call their office and say, "Well, I'm having if you're unable to get anything."
Oh, okay.
You call your representative and say, "You have to help me," and they will. It's interesting. A lot of people just completely. One of my friends was trying to get unemployment, and they were having a hard time. And I said, "You should call your representative," and within 2 weeks, she got her money.
Would that be the state?
Your representative is there from the state of New York. Yeah.
Our state assemblyman is what you're saying, yes,
Sure,
or
right.
state senator.
Again,
Okay.
I'm just saying, if you call on Monday and you're getting nowhere,
Yeah.
you remember your representative is there for you.
Okay, good. And I fully intend to call your office and make an appointment. You guys did our taxes last year. Thank goodness. I was so glad that my husband decided to come to your office. But
sorry to hear about his death.
Thank you. But I'm going to need your help, Esther, this year especially.
Well,
so I will
take
be
good
making
care
an
of you.
appointment.
We will take good care of you. Again, a happy new year. Hopefully 2025 will be better than 2024 for you.
Thank you so much.
All right, thank you, dear. All right, Mr. Goliath, the tax lady, 8030930, 8030930, star 930 on her cell phone. Here's another thing that, again, I talk, my friends, I don't want my friends to feel like they have to use me as a tax accountant, right? But my cousin was here visiting from Michigan, and she's got a child, and she got a divorce, and so we're sitting talking the other day, and she said, "Oh yeah, her ex-husband claimed the child, and she didn't get the earned income credit." And I said, "Well, why didn't you get the earned income credit?" She said, "Because my ex-husband claimed the child." And I'm going to tell you, for those of you listening that have this situation where there's a child that lives with you, and the dependency goes to the non-custodial parent, which is generally the dad, that doesn't preclude you from getting the earned income credit. And so, thank God my cousin's here, so I'm going to get her $3,000 back for 3 years. $10,000.
Makes you feel
with
good
interest.
when you're helping somebody,
And so we were just chit-chatting about it, I mean, when you walk in my front door, I don't go, "Now, do you do your tax return?" I'm just
No, you
wanna
just
help
go, "Tell me your tax situation."
We don't do that. But she was saying, because then he passed away, and so she said, "Oh, this year she's going to get the earned income credit." I said, "Well, how come you haven't before?" "Because he claimed a child." No, that's wrong. So, the thing is, taxes are so confusing and so complicated that in her situation, it was around $3,000 for the last 3 years,
Yep,
plus interest.
that will be great.
All right, let's go to the phones.
Mary Ann from Buffalo.
Hey, Marianne.
Mary Ann?
Hello.
Maybe she held for a while.
Hello? 3, 2, 1.
Okay,
Sorry,
well,
Mary Ann.
want to go to Patty?
We'll go to Patty.
Hey, Patty, how can we help you?
Hi, I have a joint investment account with my daughter, and if I want to add more investments to that account, is that considered a gift to her in the joint account?
It may. In other words, if you're adding money to an account that you're just gifting half of the assets to your daughter, of course, that's
It's a
gift.
joint account. It's in both of our names.
But is there equal access?
Pardon?
Are you both owners?
Can she take
Yes.
the money?
Yes, we're both owners.
Well, then You have to, but you have to
But
understand
if I add more
this
to
year
the
it's
account-
$19,000 that you can give her
Okay.
without doing a gift tax return.
Yes, that is considered a gift then if I add to the joint account.
If
Now,
she
it's
has,
my
if
name
that
also.
money is considered hers,
And
if
mine.
half the money is considered hers, either or, then it would be a gift, yes.
That would be. Okay, and if we both decide to sell some of those investments, how would I be
Is it a
what would
brokerage
be the
account or is
cost
this?
base?
Who's listed first on the account?
We're both listed
No,
on the
who's
account.
listed first?
Oh, gee, I don't know.
Good question.
Possibly.
Well, take a look at your statement.
Yeah.
And to whoever is listed first, they're like the steering committee. So that's
Okay.
That's who will have
who
to
would
pay
report
taxes.
So the cost basis would be mine
If you're listed first.
if I'm listed first, and if the account is listed with the Social Security with my daughter on there first,
Then it would be hers.
then what?
But
Then it
but
would be
the
hers.
cost basis is the cost basis. In other words, this sounds like a stock account, right? So
Yes.
it would be cost plus other income that might have been reinvested over the years, or other stocks that you might have purchased. So you have to keep track of the basis. Your broker will probably be able to give you a basis, but either way, if it's a gift that you gave to her, it goes back to your basis anyway.
Okay. So, but it still would be considered a gift, even though it's a joint account with her name.
If she's a co-owner, yes.
Okay, that's what I was
But
wondering.
remember, here's the thing that's important though. Just because you gave her a gift of over $19,000 and you have to do a gift tax return doesn't mean you're going to have to pay a gift tax. It's
Yes, I
strictly
know
an
that.
informational form that the IRS keeps track of should your estate exceeds $14 million.
Now, she lives in another country. That's another thing.
Is she
I
a
don't
U.S.
know if
citizen?
that makes. She is a U.S. citizen living in another country.
Okay,
Yes.
well, you're taxed on worldwide income if you are a U.S. citizen.
Yes. Okay.
Okay.
Happy
Happy New Year, my dear.
Well, I have one more thing, if I can
Yeah,
ask
what you got, Patty?
Well, she came back to this country for a short time and earned some money. That money went into that account. Now, the money was sent back to her in the other country. I don't know if that's considered my income because I'm a joint.
Whoever
And that-
earned the income is to whom they're going to have to put it on their
Who's ever
tax
listed
return.
first.
Yeah, she's going to have to. Where did she earn income? Was it in the U.S. or the other country?
No, in New York, she came back to this country,
Right. But does
earned a couple of months she was here, earned some money.
Did she
went back-
perform a service for that, or was it just interest income?
No, she worked.
Yep,
Okay,
she's going to
so
have to
that's
file
gonna
a
go
return.
On,
Well-
that'll go on her U.S. return.
does she work in the country she's living in?
Yes,
She has to file a U.S. tax return every
that.
year.
Right.
yes.
So
and she has to file a tax return in the other country. And whatever taxes she's paying to the other country, she can use as a credit on her U.S.
On her
return.
on her U.S. return.
Okay. But that's not considered a gift. It's in the joint account.
No.
See, that was the
No,
thing I
no,
couldn't
no,
figure
because
out.
it's income. It's income that she. Well, first of all, it's income she earned. All right, so she's going to have to pay taxes on that. If she bought stock then with that money, then that's going to be her basis in that joint account. And you got to make sure you keep track of all that because when you sell it, that'll be directly important upon the sale to know how much she paid for that because
Yes.
that'll be her basis in the stock.
Well, no, it was just cash in the account, and that cash was sent to the country where she's living.
Okay, well, again, she pays taxes on the income earned, And when she put that money into that joint account, if it's into savings, it's no problem, because in savings, it's after-tax dollars, which she's doing. Any interest or appreciation is going to be taxable again when you guys get the 1099 or 1098 at the end of the year of
Okay.
next year, 2025.
Thank
Okay?
you very much.
All right,
I
thank you,
appreciate
dear.
your help.
Thanks for calling. I'm Esther Gilius from I don't know who I am. I'm Esther Gilius, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break. We'll be back on the other side.
The bills make me wanna kick your heels up and throw your hands up and throw your head back and
Oh my God, I love the Bills so much. So a friend of mine just called me today and said, "Are you a Bills fan?" What, is the Pope Catholic? I mean, hello. He's like a crazy person. Anyway, hope they win again tomorrow. They're awful good.
Yes.
Right?
Yep.
Okay, let's go to Carol, who's been waiting for so long. Hey, Carol.
Hi. Can you hear me?
I can. How can we help you?
I have 401s that were converted into lifetime benefits, fixed income. And I get the money until the day I die. Okay?
Okay.
And twice a month. Not twice a month. Each annuity is a separate issue.
Sure.
Okay?
But their
It's
payout,
when
you get 2
large
payouts a
one,
month, right?
And on the anniversary date, it gets reset. Okay, and from getting it monthly at a certain date, you can take what you're allowed. It just won't come directed on specific dates.
Okay.
You can take a lump sum.
Okay. Because it's your money.
Okay, so how much do you need to know to pay federal and state, number one? And if you do remove the money, what is the tax penalty on it?
All right. Are you over the age of 59 and a half?
Yes.
Okay, so there's going to be no
Definitely.
penalty. It's
Almost
just the
80.
the appreciation is going to be partially taxable. So the money you take out, because this is an annuity that you paid after tax.
Esther, hold on.
Yeah.
Carol, you said it came from a 401k.
Yes.
And you rolled it over.
All the
to-
money was from a 401k?
They were made into annuities, IRAs.
All right, so it's all going to be fully taxable.
Because, you know, you didn't pay tax.
But there's no penalty.
What it
It's
is.
just going to be fully taxable.
Okay, what you remove.
Everything you remove is going to be fully taxable.
Okay, so let's say it's $10,000.
Then it'll be fully taxable.
And how much would you plan on?
All
fully
right, do you have any other source of income besides Social Security?
Just Social Security and two of these.
And
Lifetime.
if those annuities are $10,000 total, then you're not going to pay any tax.
And you're single?
No, I'm widowed.
Okay, so your spouse passed away, not in 2024, before 2024?
Yes.
Okay,
Yes.
so again, you're going to pay no taxes.
You'll pay no taxes on what you remove.
On 10,000, you said 10,000, on 10,000, and you're over the age of 65, you won't pay any taxes.
Okay. But let me see, how does this go? But I withheld taxes.
You'll get it back.
Then you'll get a refund.
Okay, federal and state, but how do you know how much you're supposed to withhold?
Okay, so what we'd suggest you do, and we have time here in the next 15, 20 days, give us a jingle. We'll figure out your situation and tell you how much to withhold, because you really don't need to withhold anything.
Really?
Not if you're keeping it at that level. Now, if you take out 30,000, we have another situation. But at that level, at around $10,000, you're not going to pay any taxes.
Okay, but you're allowed, let's say, 30,000 on the
You can
anniversary
take out
day.
100,000, but you pay taxes on it then.
Yeah, you got to give us a call, Carol, during the week so
No,
we
I
can
won't
work
be
up.
no 100,000, that's for sure.
Well,
But
again,
I'm trying to take some money to live on.
okay, so if you want to give us a
Because of all
jingle,
the increases, we've had, car insurance, everything, and
sure,
medical insurance. There's so many increases.
sure.
Just to
Well, if
kinda
you want to
reset
call us,
yourself.
632-7886, we will talk to you, see how much you need to live on, figure out what your tax liability would be. Maybe it's as low, maybe your liability might be $100 or $200, but that's all you'd need to withhold.
Because I pay RMDs
Right.
with the two annuities, the IRAs, and the Social Security. It covers my RMDs.
Sure.
Okay.
No, your RMD is not covered by Social Security. Social Security, Social Security. The money you're taking out of your 401k in the form of the annuity is your RMD.
Okay.
Okay,
All
but
right.
give us a call during the week so we
Right.
can have more time and discuss this.
Right, and discuss it
And,
not on the
who
radio.
Okay,
should I
thanks.
ask for, please?
Ask for Chris or Tiffany or Esther, okay?
All right, Chris.
All right.
Yep. And the phone number is 632-7886.
Okay. Thank you very much.
Thank you,
You're
sweetie.
welcome, Carol.
All right, Happy
Happy
New
New
Year.
Year.
And I'm Esther Gilius, the tax lady from EG Tax. All right, now we have another.
We got
texter.
Mary Ann back.
Mary Ann. Hi, Mary Ann.
Hello.
What you need?
What?
Are they doing away with the windfall elimination? I worked in Canada for 33 years, and I worked in the U.S., so I'm eligible for CPP and Social Security.
So you're talking the Canadian retirement and the Canadian Social Security?
And CPP is the Canadian Social Security.
Yeah.
Right.
Yeah. Yeah.
And U.S. Social Security.
Okay,
I was
what's
a
your
daily
question?
commuter. Have they done away with the windfall elimination?
No.
Is that in Canada? Is that a Canadian tax situation?
No, I'm American. I commuted daily to Canada to work.
Right. But you're now no longer filing a Canadian return.
Correct.
Right. So then your Canadian Social Security is going to be taxable on the U.S. return. And you can...
But
Yeah.
there was something called a windfall elimination where they reduce your U.S. Social Security based on what your Canadian Social Security is.
But
My
that has-
understanding is that they've eliminated that.
Okay, but that has nothing. Whatever you receive from Social Security or from Canada is going to be taxable, subject to the computation on Social Security taxability on either.
Yeah, I have.
understand
Esther, you've been doing this for a long time. Have you ever heard that they reduce your taxability of your federal Social
No,
Security
they-
by?
no, not at all.
I've never heard of this.
I would, Marianne, call Mike Hayflick from the Financial Guys. Yeah, Mike Hayflick,
Okay.
633-1515. He's a Social Security expert.
Not going to charge you.
He's not going to charge you. And you could ask him about the windfall, or you can call Social Security themselves.
But I like Mike Hayfleck. That's a really good idea.
But your Social Security is based upon your earnings record, so has nothing to do with the
Yes,
windfall.
but if you
But
collect
you know,
all
the thing is,
countries, there was-
people talk about this stuff and they don't know what they're talking about. But that's why I think the best thing to do is talk to Mike.
Okay, and the number again was?
633-1515.
And if you find out something, give us a call. Give us a jingle next week.
Okay, I will do
Okay.
that.
Thanks,
Okay.
Marianne.
Thanks.
I'm
Thanks
Esther
for your
Gilius, the
hard work.
tax lady. We have who's next?
We got Marty.
Marty. Hey, how can we help you, Marty?
Hi, Tiffany, Esther, and
Chris.
yeah, Chris. I'm
Hey,
sorry.
Marty.
Yeah.
Marty, Happy New Year.
Happy New Year's all. Okay. My question is, it goes back to the filing the form for your LLCs and corps.
The BOIs.
BOIs.
Years ago, I had some entities, and they used to dissolve by proclamation if you had no assets in them.
Right.
How far back do you have to go on these entities?
No, this is strictly existing entities
That are active.
Right. And if it's brand new LLC, limited liability, you had very little time in 2024 to do it. But if it was prior to 2024, they're giving you to the middle of January.
As long as it was active. If you haven't done anything for them in a long time, you have nothing to worry about.
Right.
But if you have an entity that you haven't used in 2 or 3 years,
Then it's
got
probably
no
kaput
asset?
anyway. Right. There are a number of things that are exempt. A lot of them are banking and financial institutions. But if you have a small business that's still operating, then you have to do, and it's an LLC or a 1120S or a partnership, you have to file this.
Well, if you look in the Department of State web pages and you find out that the state still has it classified as active, would you then have to file?
I would. Oh, no. Is it producing no income, though?
Producing no income.
Then you don't have to file it. That's one of the requirements.
Okay. And last question on this: if there are penalties and stuff that come, does it go just against the corporation or LLC, or does it feed through into the owner of that entity?
The owner.
It'll go to the owner.
The owner.
Because those are the people that have to respond.
Okay, so it pierces the veils and goes to the owners.
Well, it really doesn't pierce the veil. It's a penalty for failure to let them know. So they're going to go after the individual.
Gotcha. Okay, you answered my questions, and I do appreciate it. Thank you.
Thanks, Marty. Happy New Year.
Okay, what do you got? A quick one here?
We do. We've got Mark from Tonawanda.
Hi, Mark.
You got a minute, Mark.
Okay, I'm going to do it real fast. Esther, what happened is I applied for the real property income tax credit for last year.
The 229?
And for some reason, they sent me that $45 credit that you get. Remember,
got it. All right, so go back, amend the return.
Wait a minute. They sent me another letter stating they want that $45 back with interest, and they never sent me the income credit, the IT credit.
Okay, if you need help, call us. We'll help you with this.
Yeah, give us a call,
Yeah, because it sounds like-
632-7886.
You know, what people don't understand is these agencies talk in forms. They can only address forms. So when, if the IT 229 wasn't filled out correctly, and you did the other form in error, that's what they're going to point to. So again, if you need help, give EG Tax a call. I'm Esther Gilius, the tax lady from EG Tax. If you need the best tax help, we love you. Go to egtax.com. We have a beautiful little brand new website. We would love to help you. All of our 32 offices are going to open up in the middle of January. If you have questions, you can call us and talk to us, and we will talk back. Until next week, I'm Esther Gilius, the tax lady from EG Tax. Go Bills! We'll talk to you later.